Good day, everybody. It's Greg Schnell, and I am here with the weekly market review for August 3rd, 2019. This week it's titled The Bulls Leave the Ranch, and I think we all know why. It was a bit of a stampede lower this week, so we're going to jump into it right here. To find my blogs, go to StockCharts.com and click on the Articles tab. Once you're at the Articles tab, you can also use the drop-down menu on the right and find the Canadian Technician articles. Don't ignore this chart or chart watchers. And please hit subscribe at the bottom if you're interested in getting these sent to your emails. Okay, contact information. You can always reach me at gregs@stockcharts.com, and I'm on Twitter at SchnellInvestor. So, this is our agenda. Markets sink, obviously. The US dollar move, it broke to a new high but pulled back to finish the week. Commodities get thrown out, literally. Global indexes are falling. Copper is frayed wire, broke a 17-year trend line this week, and big picture continues to deteriorate. So not much promising here. On Friday, I called my market buzz the market drudge, and we're about the same here on Saturday. It hasn't. We didn't get a stunningly high close to help us out. Let's jump into the charts. First of all, we've been following these advanced decline lines, and they clearly broke this week. But the big thing to remember is this negative divergence here, where we have a lower high each time the market tried to rally, and now we're breaking down again. And this breakdown here, if it was just one market, would be fine, but we're seeing it all across all of the markets. So here is the NASDAQ high-low, and this spit down to minus 100, which all through May, it ended up pulling back for the month of May. I think this will be a bigger decline, but we'll find out if I'm right or wrong. Just all of my charts seem very, very weak here. So here's the New York Composite, and you can see it's breaking the upsloping trend line. And we have a trend line here off the 2018 lows that has been broken this week. And as we broke that, this is the advanced decline line. There is one more trend line that we might be able to draw here and get some hope at, but right now this big upsloping trend line looks like a problem. Looking in on the high-low for the New York Composite, we got down to just below zero last time we did that. We were in May. So we'll need to keep watching that one. This is the chart for the S&P 1500, and while the chart has not broke yet, the trend line on the advanced decline line has broken. So that's a little iffy. That's a bit of a problem. We've been watching the Canadian market, and I'm going to move at pace today because I wrote down 3 pages of messy notes that we've got problems with. Today, the advanced decline line on the Canadian market, I said that it's usually weaker than the US market. First of all, we have the high way back here in August, and then we have a lower high in April, and now a lower high in July, and we've broken the uptrend once again. And when we broke the uptrend at the end of April, that gave us our May pullback. Now we're doing it again, and the TSX was unable to break out to new highs. So all of these are leading to tell me more problems ahead. For the high lows in Canada, we went just below zero. Now that's not that big a deal, but the problem is we never got above 50, so that is a big deal. We had a weak market to begin with, and we just can't break out to the upside in terms of net new highs, even with the big push in gold. And Alexander Elder's 5-day summary of new highs minus new lows rolled over quite hard from over 1,000 to 700. This one I found even in May, while the market was breaking down. This didn't break down until kind of the 7th day or something into the pullback. For the McClellan oscillators, this is breaking down hard. We're falling below this 800 level, and you can see there's some examples from in the past here where we fall below 800. Now, usually when it breaks below 400, I find that's when the biggest declines are, but you can see that this one in May happened from a much higher level. And we have some other examples here where, just breaking down at the 600 level was pretty important. But I think for me, in general, the summation index is just telling us we're getting weaker on every rally. And based on my chart work, I think the rallies are all done. So NYSE Summation Index Weekly rolling over here again, and you can see this is kind of a big move down. So after moving up, pulling back quite hard. Looking for the NASDAQ summation index, same thing. This is rolling over. It only got up to 100, which is pretty weak actually. And when we look left on the chart, that kind of time frame is 2015, something like that. And back here in 2007, 2008. There's another example here in 2011, I guess. But for the most part, these are pretty weak levels that we're at, and not getting above 200 is concerning. As we roll over and go below zero here, I would say that's problematic. Now, this chart can get a little bit weaker before it really breaks down hard, but the bottom line that I'm worried about is this big uptrend we had, and we've violated it a couple of times, and now we're pulling back through it again, and so it continues to make me a little bit leery or weary as to whether or not we've got more strength. And you can see in 2007 we kind of wobbled around this area for a while before we broke down too. So we're just doing it with a little more enthusiasm this time. Okay, the bullish percent indexes for the NASDAQ composite now back below 50%, percentage of stocks above the 200-day moving average only at 47%. And it's this divergence that I'm worried about for the big bull market ending, is only 50% of the stocks got above their 200-day moving average. Really not that good. And then looking at the NASDAQ 100, we were over 82%. We're now 62%. So a full third of the market, or 20%, 25% of what was bullish has already retreated back down. We're well below the 70 level, which I'm not happy about. We still have 72% of the stocks on a buy signal, but again, back in 2007, we had this same sort of setup where we kind of rallied into this mode and then fell apart from here. So continuing to watch to see if that's the kind of outcome we're going to have. For the New York composite, so those two were the NASDAQ composite and the NASDAQ 100. For the New York composite, what we want to look at here is we're only at 51% after being up to 57%. But again, we never are getting back into the strong areas here, and you can see all of the big pullbacks in the market happen when we struggle at this level. And here's the 07 level. We've been talking about this for a while, and now we're starting to get that breakdown. Percentage of stocks above the 200-day moving average got up to 66%. You can see that here. And now we're down to 58%, but the bottom line is not a whole bunch of breadth here, so only 51% on a buy signal and only 58% still above their 200-day moving average of the broad stock market. Okay, bullish percent index for the S&P 500. This is the big daddy, and what we want to talk about here is 61%. That's pretty low, and again, you don't really want to fall this quickly here, and we were over 75% with the percentage of stocks above the 200-day. We're down to 65%. You can note these red arrows when we kind of break down below these levels. This is kind of concerning. So anyway, keep in mind that if we're going to fall over here real quick, that would be problematic, much like we did in that September timeframe, got up to here and then fell apart. So stay tuned. TSX, don't like this one, but it's better than the others. It hardly changed this week, only down 1% on the percentage of stocks on a buy signal, and we're still at 64% of the stocks on above the 200-day moving average. So that's actually quite bullish. And as you can see, it only gave up 1%. Now, the Canadian market actually moved down relatively stiffly, especially after trying to break through highs, but didn't do it with any sort of gusto. But it was traveling sideways for almost 6 weeks, and then all of a sudden plummeted down here. So this is a big deal that is broken down. Okay, I'm going to be very selective on the charts we're hitting because I've got so many I want to share. The S&P 500 large cap, so this was options expiration, rallied just barely above that and then fell apart. And so far, of course, we all know that we fell apart on the Fed meeting. And so this is where the market has started to break down. Down here, I've got the put-call ratio, and you can see it closed at the highest levels, going all the way back to February of last year, with the exception of the December lows. So is this an initiation thrust or the end of the move? I think it's actually an initiation thrust. And I have a whole bunch of reasons for thinking that way. But when we topped out at the end of January, you can see we were really low. Well, we've in 3 days, we've already moved way up to the level we took almost 2 or 3 weeks to get to in after the January breakdown. So This market's pretty tender here for the, this 200-point move or 100-point move on the S&P 500 has taken us well up, and you can see that the put call ratio was climbing, starting to get a little more worried, and then all of a sudden, bing. So, over the next couple of days, let's say we rattle around, I still don't think we've got the power to keep going higher, especially with the earnings seasons mostly over. So the 1 month performance on the S&P from the highs were down about 3%, nothing major. But again, I'm expecting more. So this small uptrend line, and so one of the things I need to think about is, we have a big uptrend, then we have a pullback, and then the next uptrend doesn't have as much length or height to it. So getting weak, and that's kind of the issue that I'm worried about here. Looking at the big picture of the S&P, the Nasdaq Composite, and the Russell all just kind of lined up together here. For the S&P, you can see that we broke back below support and closed down there, so that's not very good. Now we're close, so let's not give away the farm just yet. But this is not good that support didn't really hold. Looking at the Nasdaq, we clearly broke through support. We're at, already below the lows of July. Same thing on the S&P. So we wiped out the month of July's work, and unfortunately, the month of July's work was the breakout to fresh new highs. So far, we've started August with a failed breakout for July. And looking at the Russell, we never did get back above the prior highs from April, and this rolled over with a big outside week, so that's not good. Okay, the S&P 500 topped out right at this red trend line. I don't think that was really the factor, but what we see here is a lot of negative divergence where it's making lower highs in momentum as we're making higher highs in price. Looking at the Nasdaq Composite, one of the things I don't like is this relative strength line. So how fast the Nasdaq's moving up compared with the S&P. It works pretty well when the bull markets are running, that the Nasdaq is outperforming. Well, you can see the Nasdaq is starting to underperform here, and that would be a big deal. I tried to count distribution days in here. I think there's only 4 or 5. Normally 6 is kind of what you're expecting for a market breakdown. But again, I think seasonality and a whole bunch of issues are showing up here. Looking at the weekly chart for the NASDAQ 100, going back to the 2016 time frame, we haven't broken this uptrend line, and it wouldn't take much to do that, but we haven't yet. So anyway, that's the next kind of thing we want to watch for. You can see that this PPO downsloping trend line here for the last year and a half continues to make lower highs. And what happened back here in 2015 is we had this rally. We came back up and then sat up here for a while and then rolled down. And so this is kind of the move the TSX just made, sat sideways for 6 weeks and is starting to roll down. But what we want to watch here is, we had a big thrust in momentum and then an attempt to go higher and not as much momentum showing up here. And the bigger issue, of course, is a failed breakout. So want to watch all of these things, but if this relative strength trend breaks down, I think that's a bigger deal. And you can see back here, when that trend broke in 2015, that was a good place to be aware of the potential for bigger market weakness. Okay, the New York Composite so far has had a failed breakout on its run here. It actually closed at the highest level since September 2018, and it closed at 13,066 for the month and 13,082 back in September, and obviously down we went here. So that's a bit of a big deal that we've rolled over already. Our PPO has not crossed back to the upside yet, so we're still on this long-term basis in a corrective mode. And the worst part is this little bar here represents 2 days, so the point I want to make is I'm using these charts to kind of look at the July close, not so much the August 1 and 2. But you could see that we closed here at this level earlier in the year for April, and then May we pulled down hard, and then June we pushed back up to the same level. July we ended up closing back at that same level, so this is a failed breakout so far, and down we went. So again, much like we saw back in history here, where you just can't get through these prior closes, and then all of a sudden starts to roll over again, and we have the same sort of momentum slope going on here that we had back in 2015. Okay, the Russell's a really interesting one here. One of the big concerns I have for the Russell is on its weekly chart, the PPO is just scraping above the zero level. We're at 0.26 or something, 0.28. And you can see we've pulled down, rolled over, and we're coming towards the signal line that's really hard to see in here, but it's sitting right about this level, 0.24 maybe. What is our, 0.212. 0.215. So with that, any sort of further weakness in the Russell this week will probably generate a sell signal. And the issue we have is how close that is to zero. Now, I do want to point out one other thing on the Russell over on this chart, and this is the monthly chart for the Russell. And the PPO is still above zero. Now, it's at 2.2%, which is pretty good. What we saw in 2016 is it came right down to zero and held here. So again, the next question would be for us, are we going to be able to do that again? And this looks very similar to me to the 07 kind of pullback on the Russell. And now what we want to know is, does it pause at the zero level or does it just keep breaking down? And I'm just the way all of my charts are working out here, I think we're definitely going to get this down to the zero level. Sorry, definitely. I think we're going to get that down to the zero level. Don't want to predict the future. I'm just saying all of the charts are so broken that that wouldn't surprise me if we got all the way down there. It's probably a better way to phrase that. I don't know the future. I'm just looking at the charts to see what kind of momentum level we're at. And I still think one of the bigger issues is we've got, unresolved trade issues worldwide, not just with China. And so now the market's starting to get a little more uncomfortable with that fact, and global growth is slowing dramatically. So the Russell here, just using a line chart for weekly, you can see that we've rolled back over, made another lower high off the April high, and trying to stay above the 40-week moving average. And then this PPO here, I mentioned 2 weeks ago, this looks very ominous, and so here we sit, pointed straight down. And I'm of the belief that trend is going to continue. So we'll see if that plays out. Now for the TSX, the one thing, so the Canadian market, typically heavy in commodities, but we've broken this uptrend off the 2018 lows, December lows. And this uptrend, we broke it here in April. It pulled back down. Now we've broken it again if we run a line up here. But the bigger issue is we're back below the 10-week, and I think that concern for me is just, much like over in these areas, when we can't stay above the 10-week anymore, that becomes a problem. Now the PPO on this daily chart, so this is the 50-day moving average or the 10-week moving average. On this daily chart, momentum is now rolling over below zero, and we saw that in May. So I think for those who have been following along, I think we've picked this up pretty well. One thing I will say on the monthly chart, so the 20-week moving average is the center of the Bollinger Band. And let's just look at this a little bit closer. So here we have the stock riding and holding, and in here it kind of wobbles a little bit, takes off to the upside, and then does the same thing in here, briefly dips below, rallies back up, can't take out the prior high, and rolls over. But you're a long way away, then you're close to it, then you break down through it. And all through 2017, it was a relatively shallow pullback, and then we took off to the upside again. Well, this is kind of a good line in the sand. So you're below it, then above it, below it, and that starts your next downtrend, above it, and then holding, and now we've gapped down and below it. The worst part is all the charts in the world are breaking below their 20-week moving average. If we get time, that's what I hope to show you. The value line geometric, this one's been harder to work, and one of the reasons is the 40-week moving average historically has been a very smooth place on the chart, and when it can stay above the 40-week, it's pretty nice, and when it stays below the 40 weeks, it's be very, very careful. Well, here we have wobbled around this 40-week all through 2019, and now we're back below the 40-week moving average. But the bigger issue is our PPO is rolling over just below zero, in this case, the MACD. But when we see that kind of behavior as it rolls over right at the zero level, these blue arrows point where the market's, quite sensitive near zero and starts pointing down again. We're rolling over well under zero here, so bounced back up last week to zero and then pulling down hard this week. And you can see the full stochastic's already rolled over and is starting to move down. And this geometric index gives equal weighting to each company. So Microsoft is worth just as much as a small junior market cap with $100 million in market cap compared to Microsoft. Now, what you see, the problem with that obviously is it's not. Most of the money's in those big caps. Fully get that. The issue is that as the broad market starts to break down, it's pulling all of these charts over, and so this week it pulled them over. We really need to hold this 508, 510, 520 level, and we're sitting right on 520 to finish the week. So wouldn't want to see this slide back down again. This would be a false breakout and down hard. But I think you can see that in other places in here you kind of wobble around this 50% level. And as you do that, these are better places to expect a market top. So this one, going back and looking, would be like the 2000 market top. And we'll just keep watching to see how this plays out. But obviously the chart with a downsloping 40-week moving average and rolling back over below it has big potential for more downside. Okay, don't want to spend too much time on this Shanghai chart, but outside week, so they had the same problem the U.S. did, that when no China deal was announced, trade deal was announced, then all of a sudden, boom, down we went. And this is trying to hold the June lows here. Clearly broken the uptrend, but I think the bigger issue is momentum is very close to zero already, so having this push down and go below the 40-week next week would be a problem. Okay, the Nikkei, this one just keeps oscillating sideways. Nothing really going on here. Central bank continues to buy ETFs to hold this up. And we closed right just barely off the 21,000 level. This green line's at 21,000, and just going back in history, I think I've shown this too many times, but here's the 21,000 level, and you can see it's pretty important in long-term history. 2014, and now we've got all of this kind of price action covered by my labels. But if we just go back to the last 2 years on this chart, what you'll see here is, we haven't been able to get going anywhere. And remember, the S&P's up at higher highs, and yet this chart, here was the January high, the September high was higher, and then the April high was significantly lower, and now the July high is significantly lower. So 2 attempts in July here to try and rally through, and couldn't get back through the 200-day moving average. Oh, actually in Japan, 252. So keep watching, but I think that's a problem, and if it doesn't hold that 21,000, that would be a bigger issue. Okay, US dollar, big push this week, but look where it closed, right on the low end of the bar, and these ended up being failed breakouts or selling bars. So we're going to keep watching that, but we did get a PPO turn up and cross signal this week, so that's quite bullish for the dollar. Let's not use one day on Friday, the selling we had there, to kind of itemize it all, but if this is going to start to break to the upside, that would really change the complexion of the overall markets for me. So the US dollar here trying to stay above this 97.5 line, and we closed at 97.85. So in the range, but a little bit higher. And nothing to see on these dailies. I'm going to just scoot past most of these because while they had big moves, it's been widely talked about. The PPO rolled over on this weekly chart for the euro. We broke to new 2-year lows on the euro this week and then bounced back inside the range. But what's more important for me is this chart looks difficult. It's not, after this big downtrend, tried to rally for a couple of weeks, still continues to pull back. We'll watch where this goes, but I'm expecting lower. And we have some currencies that made new 10-year lows this week. So here's the DAX, and you can just see it really kind of needs to hold that 12,000 level, and it's not doing that so far. And then you can see this euro's breaking down to that new 3-year lows, and that's a big deal. Makes the euro cheaper, makes the US dollar more expensive. Swedish krona broke down below the May lows, so that's looking very bearish as an indicator towards the euro. Okay, British pound. What we see here is since Boris got sworn in last week, the pound had a very rough week. Look at the big drop here, and is now trying to barely hold above these October 2016 and January 2017 lows. The one thing that I would say about the British pound, and I've marked it on the chart, is it tends to make more complex bottoms in terms of the indicators and oscillators rather than just V bottoms. So at this point, we don't see the second part of that equation yet. We're still in the first part, the V bottom part. British pound again, you could just see the price action here was not very favorable. Japanese yen actually closed up and out of its range here to mark a higher high, not quite a new 3-year high, just barely below it. And then what we see on gold, obviously in the gold color here, has taken off quite significantly. Nothing that I want to spend more time on here on the yen. Again, this Nikkei, this 21,000 level, I think is critical. But look at the two price bars this week, and that's kind of what put a bit under the gold names. So we're going to keep watching and just see which way this wants to go. But so far, higher seems like the answer. Canadian dollar broke down quite hard. It's just only at 1 month lows. But when we get to the Aussie dollar, that's a much bigger concern, and the reason I say that is the currency dropped to new 10-year lows right here. We'll call it 67.5. That would put us over in here back in April of 2009, so a full 10 years later, and this chart's hitting lower lows. So that's why the stock market might be continuing on to higher highs here on the back of a very cheap currency. Looking on the daily chart, nothing really to hope for here. This is just making lower highs and lower lows almost every day. Emerging market currencies rolling over very, very hard. Nothing positive there. The bond markets, some big things going on in here. We're not going to get a lot of time to talk about them, but HYG here has rolled over and is now below its 10-week moving average again, like it was back in April, May. Also, lower momentum here, so I'm quite concerned that this is ready to roll down and probably check the 40-week moving average. A BlackRock Muni Fund, which I used to try and help me with the 10-year, even when the 10-year had started to bounce a little bit, this chart just said, don't worry about it, it's going to keep going higher, and sure enough, the price for the 10-year has gone higher, the yield gone lower. So that's been a very big clue. But just check out some of these. That's not a chart with anything we want to spend time on. But look at this break below 2%. It didn't just break it. It absolutely crushed below 2%. So we'll need to keep watching that chart fairly closely for what's going to happen. The 5-year snapped and just continued lower. So any hope and optimism that this might be changing trend didn't happen. Here's the 2-year closing right on the lows. And the 2-year weekly, what you see here is it got up to the moving average, just the 10-week, and literally failed right at it again. So nothing bullish on that front. Just speeding through these charts here to try and find, this is the 3-month, and you can just see, we've been talking about this since April, but look at this thing start to accelerate lower. Wow. The 10-year bond, I wrote on here, perhaps there's a reversal in play at this 2% level, and 3% would be really big on the MACD. But again, as this price goes higher, the MACD waves go higher. So I've got up on the top here, I've used the PPO so that you can compare this high to the highs back years ago. And the only point I put on here was 2% reversal is normal, but 4% is possible. So we could still have a huge bond move and just be normal. So here's the bond moving up. The bond price is taken off to the top side. And as long as that continues, obviously don't fight that trend. Let's just get into some of these spreads. So here's the big picture for the 30-year, and we're well above the previous annual highs. Looking at this spread chart, which keeps track of all of the bond yields on one chart, you can just see this week they all just plummeted. Everything fell apart. Now, I will say that in this period here in 2007, we pulled down, then bounced up, and then had a huge knockdown, and that was kind of the big wave that really kind of knocked the wind out of things. I don't know if that's what's just started here, but you can clearly see that we've got a lot of this rollover similarity to kind of what we had there back in 2007. And again, we've just started rate reductions. That was kind of when the US stock market topped out back in 2007 as well. So here's TYX minus TNX, so 30-year minus 10, and it's breaking this downward trend line. That's been a pretty good clue as we went back in history that things might be getting rough out there. The 5-year had broken through this trend line, has rolled over, but it's just kind of in a trading range here, so we're not really getting information off that spread. Transports were ugly. I don't want to spend too much time on them. Let's just go quickly grab the weekly charts. Weekly for the overall transport's trying to sit on its 10-week moving average and just barely above the 40-week moving average. PPO is right at zero and could roll over here with a couple of weekdays. A negative PPO on the transports usually marks a bigger pullback. 2015, 16, 2018, kind of an October timeframe down to the lows. Looking at the airlines weekly, they didn't fall out of the sky, but they definitely failed this. They were starting to make higher highs in 2019, taking out the previous highs of the year, not 52-week highs. But anyway, we've given it all back, and we're right back to the 40-week moving average. Full stochastics rolled over in this PPO. Where would you expect it to roll over? Pretty much right on the trend line, and it seems to be happening again. Railroads broke down, made the lowest close. Lowest close or lowest price? I think lowest price. I think there was a lower close back in mid-July. But the thing to keep watching for here, this was an important support level, and if it starts to break down, that's a bigger deal. Railroads, in terms of relative strength, I don't want to see this big 4-year uptrend break. It's just wobbling on that level right now, but the 2-year uptrend has broken. So that's suggesting quite a bit of caution. The autos were really a messy chart. Nissan broke to new 12-year lows, 9-year lows. Fiat Chrysler barely holding on. Toyota Motors failed a 52-week high, so it broke out and actually has pulled back since then. So those are quite concerning. Let's get into a couple of the sectors here. The broker-dealers clearly were trying to break out, failed, and are right back to this trend line, but now below the 10-week moving average, the 40-week moving average. And as we're below that, we're watching the PPO here on the right-hand side. And what we see is it's trying to roll over. Now the real question is, does it roll over? And if so, that's usually a leading group. So this negative divergence we've had for a year sitting up here is a big problem, and asset managers in general had a terrible week as a group. Okay, utilities just holding up here, sitting above the 10-week moving average. PPO's already rolled over, but it can roll over and go sideways, and that would be okay. Looking at XLI, I mentioned this on the Friday Market Buzz, but you see this chart trying to break through prior highs and failing. This is a big deal, and the PPO has actually given us a sell signal just barely, but nonetheless a sell signal with negative divergence in place here. So all of this adds up to tell me that we're probably going lower. The semiconductor index obviously pulled back really hard, and now we want to hold this gold uptrend, but I'm not expecting that to hang on. So be cautious out there because those stocks move fast. Okay, commodities just got killed. Literally, oil was down 8% in one day. So we're down here at the bottom of the range, going back to the 2018 lows, and early 2019 are just down from us here, but we're at the bottom of the May lows already. You can see the moving averages slope down, and this thing is following it. It's one of the reasons I've been worried about a bigger market top. And look at this commodities rollover just below zero, but now we've got a cross on our signal line. And I mentioned that when commodities roll over, usually it's kind of a clue that something else in the bigger picture is going to roll over. Many people don't believe that, but watching the PPO momentum indicator is not a bad place to be aware of. So in May, this had topped and started to roll down in June, and guess what? U.S. stock market paused a little bit in here, and then over here in September, as this rolled down, this became a better place to be aware of, especially below zero. And so all of these indicators that we're getting all seem to be lining up for the first time, really coincidentally. Going to be kind of selective going through here. Yeah, let's just do all of these because they're all the same sort of chart style. But West Texas crude is below its 10-week. Then natural gas is below its 10-week, pointed down, nothing really bullish there. Heating oil is below its 10-week moving average. Gasoline is below its 10-week. Actually, heating oil is right on its 10-week moving average. And then corn, soybean, and wheat all below their 10-week moving average. So that all seems to be failing. So no support from the ag sector there. Gold was one of the things up this week. Silver was actually down on the week. So keep watching it. That gold trade, if the US dollar is going to soar, I expected the gold trade to pull back a little bit harder. It did not. So anyway, we're still watching. Now on this copper chart here, you can see this big 3-year trend line that's broken. That's a big deal to me. You can also see a head and shoulders sort of structure over a 3-year period. That's the kind of topping you get in major commodity market tops. And if we unwind this tape, just whatever, what you're going to see back here in the 2010-2011 period was we kind of worked our way through 6 months after a breakout here, and it took maybe even 9 months before it started to break down, and that was kind of the beginning. But we see this this copper move down here on the far end. Well, one of the main concerns we have is that you can just see we used to rally up in this area around $4, then we got to $4.50 at the top, down to $2, up to $3, and now starting to move significantly lower. This aluminum whipsaw, I think we'll have to ignore it on the chart, so I don't want to use it as a benchmark. Livestock was weak, sugar, coffee were weak, cocoa was weak. Medical marijuana had an up day on Friday, mostly due to Afria actually reporting positive earnings, and I think everybody was surprised by that. I think the stock was up 20-some%, but it had enough momentum to kind of turn up the marijuana industry ETF. A lot of the other charts had a pretty good Friday, but again, they were ugly to begin with, so let's not hold too much hope. Both coal and steel, really tough week. You can see they both plummeted below their 10-week moving averages. Coal down to new 2-year lows, and still trying to hold on to those 2-year lows, not expecting that to last. Lithium below its 10-week moving average, failed to break out through a downtrend. Same thing for rare earth metals, and what you see there is a big downtrend line and the 10-week moving average, and it's breaking below that. And as it goes below this 10-week moving average, it really needs to kind of hold in here. If it's going to start taking out the December low, that was a 2-year low, then be a bigger deal. So I'm not going to go through these indexes just because we don't have time. Baltic Dry Index has rolled back over. It was giving us a breakout signal, but you can see we had this kind of back in 2013-14. Anyway, it broke out, but it ended up pulling back in. Here's XLE for energy, and I would just say this is weak. It's back below zero on this daily chart, so that's a problem. But looking at crack, this chart's weekly, and the PPO is still oscillating below zero and going flat, and the histogram has already started to decline. We're stuck under the 40-week moving average. The full stochastic has turned down at 50. Never a good sign on a weekly chart, so we want to keep watching. Going down here to crude oil, you can just see this big pennant we're in, but we've got two down sloping moving averages, and the PPO is well below zero here, so nothing to really get comfortable on that chart. Natural gas, the only thing I want to point out here is we're at 3-year lows, and this 3-year low is very low. I wondered if we might be able to rally out of here, but that was not to be. So continue to watch it here, because some of the times if the S&P gets negative, you'll see nat gas traders come in, because all of a sudden nat gas isn't very well correlated with the S&P 500, so people look for non-correlated assets. What we have here is the uranium weekly, and the chart continues to break down. It just broke down through the 2000 or through the $10 level back in December. 1085. We've broken the uptrend here on the PPO and going lower, and down here is the actual Cameco chart, and you can see the 800-pound gorilla has left the station. So all of those charts are breaking significantly lower. And this copper, I think we called this pretty good, copper rolling over at zero, and down it's been. So when we talk about the PPO rolling over at zero, this is another good example where, at the time we were at 290, we're now at 255. So that's a relatively big percentage, 20% or something. Steel, the only reason to show it is just to get the momentum indicator. So as soon as that is done, we would, as soon as these charts kind of firm up again, we'd be able to deal with the change in trend, but we're not getting the change yet. So what I'm worried about is the chart continues to go lower here, but look at how important these support levels are. This is steel. Copper's breaking down. I'm about to show you a chart of copper that just makes me melt. This huge trend line. Where did it go? I want to find that one. This one, copper breaks this 17-year trend line, and again, this is not positive. You can see the big lower highs here. This 330 level was big. Now the $3 level was big, and now we're starting to lose that. And this $3 level was kind of horizontal support for most of the last decade. Not anymore. Down we go, and so breaking this giant copper chart, I think, is just very difficult. And with the metals market starting to roll over, this was the XMA in Canada, heavily weighted into gold, and it's rolling over too here. Look at the lower momentum. So I'm watching that quite closely and a little bit worried about gold, but hey, that's the issue. When you trade something working, it wants to keep working, so that's good. Gold breaking out to higher highs. Really like that part on the chart. On a daily, I had a trend line here starting to break that. Relative strength was starting to go out, and then after the Fed meeting, it was like kabing. This thing just went to the moon. So relative strength back in play. Gold here, shows a consolidation after a breakout. That's pretty bullish, and looks like it wants to keep going higher. So we'll continue to monitor that. If the US dollar rolls over here, that might be the accelerant for gold. And also the Japanese yen was moving higher, right? Broke out to new highs. So with the yen breaking out, this gold chart, you can see GDX didn't make a higher high this week over last week, but if it was to do that, that probably puts the gold trade rate back on. Okay, silver didn't make a higher high. I'm not sure we need to spend much more time on that, but we're stuck in this range. So, the problem we've got is that as these precious metals turn, we want to be aware of them, but the problem is the rest of the commodity market is literally being slaughtered here, livestock included, and these charts are not looking very good. So lumber actually rallied up on the week, PPO right around zero, so we'll see if there's any headway there. But the wood ETF was taken out to the woodshed and rolled back over quite hard. This was down, and if it starts to break through to new 2019 lows, obviously that's a significant hurdle. So we'll keep watching the price of lumber, but this wood chart suggests things are ready to go lower, not higher. The the Nissan chart was one to watch for, and then we're going to get into the global indexes because we've only got a few minutes left. So with the Nissan one here, look at this chart breaking down and goes all the way back through 2015, and when we widen out the chart, you can just see that we're starting to go back to these 2010 lows here. That is horrific, and the momentum is down, pointed down, getting worse. GM had a failed breakout. Fiat looks like it's ready to break down. Toyota Motors had a failed breakout. Lots going on, and Tesla actually traded in the range last week. I think we've all heard about a car company over in Europe, the Aston Martin, and they went public, and that stock is just getting pommeled. Ferrari's still holding up okay, but this Tesla chart had an inside week this week, so we'll keep watching to see what happens. Still got negative momentum, but at least the momentum curve is pointing up. If the full stochastic rolls over without getting to 80, I think that's a bigger problem. So keep watching Tesla. Not real comfortable. It's ready to break out to the upside. Okay, on the DAX, so one of the things to think about on a monthly chart is, are you above the 20-month moving average? And just, in 1997 to 2000, look how easy it was. We just kept riding this up higher and higher and higher. And then when we were below it and then we were above it, well, those were the days when life was easy. So then we rallied up here, and here we had accelerating slope, and then a lower slope, accelerating slope, a lower slope, but still up, and now we're down. And one of the concerns I have is these major trend changes sometimes are subtle to spot near the top. But if we were to start to break down now, we have a left shoulder ahead and a right shoulder. We're following below this downsloping 20-month moving average. Look at the PPO right at 0 on a monthly chart. So again, monthly charts, when they broke below 0, this was 2001, 2008. These are meaningful places. We've already broken the uptrend in momentum. And this chart, quite frankly, is way too weak for me. So lots of things I don't like. Look at how narrow the Bollinger Bands got here late in 2018, the narrowest point anywhere you can find in 25 years, way back to 1995. A pretty darn big deal. Anyway, that narrow Bollinger Band, you can see all of a sudden it looks like we're stuck on the lower side of these. We tried to rally above last month, made a high, failed, closed below 3 of the prior highs for the months, and pulled back, still in the range. And then to start this month, we're already back below the downsloping 20-month moving average. Again, my breadth data tells me that we're probably going lower before we go higher, and so it looks to me like we want to break that line. Now on the weekly chart, I've got too much information here, so I'm going to shorten this chart up, but you can see this big trend line that we had kind of going through here. There's a more exaggerated one that we had on the previous chart. With longer data, but you can see here we do not want to start to break below 10.5, but we now have broken below the 12,000 level, and what you see on this 12,000 level is that was the highs back in 2015, so 2016 and 17 it was support, and now we're starting to break down below it. We're on a weekly chart, and we're also below the 20-week moving average. That's the center of the Bollinger Bands on a weekly chart, so we're below on the monthly and below on the weekly. Bit of a concern. PPO has already given us a sell signal in Germany. So that's negative, and we have lots of them. This is France, and we're just sitting barely above the 20-month moving average. Again, a failed breakout on this chart where it pushed up last month and then closed on the lows, and now it's closing lower. And remember, we had this push up, a pull back down, a really hard reversal, and no momentum follow through. So normally when you get those hard reversals, what you want to see is that you keep going higher, right? All of a sudden you start to start a new uptrend. Well, what did we do? We immediately turned it around, and now we're making lower highs and lower lows so far. Any way you look at it, we're making a pretty significant lower low, even if we ended the month high. But again, I think the problem is you can clearly see we've been trying to get through here for almost 2 years. And if we've got a flat 20-month moving average. So if we're going to start breaking down here, there's lots of reasons to be concerned. And this upsloping trend line that goes for a while back here, 2011, if this was going to start to get broken, that would be a problem. So anyway, we have a lower high on the PPO right here, and it looks like we're touching the line and going to start to roll back over. Too early to say on how it's going to behave this month, but last month we got right to that line. If it's going to fail here, this would probably be an important signal, and look how close it is to zero. And again, we're on a monthly chart rolling over at zero. These can be vicious. Okay, the French weekly chart back below the 20-week moving average and closing well below it. We also did that in May, finished the week down there, and then in June we immediately reversed. Well, we're starting the month going down, not finishing the month going down. We have a PPO sell signal on that one as well. And again, lower highs than 2017, but higher highs than 2018. So if something was bullish, it's that the weekly chart's a little bit more optimistic. Okay, the Amsterdam Exchange is holding above its 20-month moving average, but the PPO is absolutely flat here, so I can't tell you just how close things are to actually rolling over and break down. To me, these charts are filled with that kind of tension. Amsterdam briefly broke above the prior highs from 2018, 2019, gave it all back. Not only did we not stop near support, we went right through it, went right through the 20-week moving average. We're moving down. We didn't quite get a PPO sell signal. We'll find out if we get one this week. But it would look to me like this uptrend is already broken. So be careful out there for the people in Holland. Now, this is the Swedish stock index, and I like to watch it quite specifically. But we've got a downtrend line here. It's trying to break out through the top side. So far, it's got a failed breakout from back in April. So April broke out, and then we haven't been able to take out that April high. We've been making lower highs and lower lows. So keep watching and just see if anything's going to work out there. This is the weekly chart, and we're back below the 20-week moving average with a PPO sell signal and negative divergence here, or not negative divergence, but lower momentum. So we had a high in momentum, a lower high in momentum. If we made a lower low, so if we dip below this here, then all of a sudden you got lower highs, lower lows. That's not usually how the stock market goes up. So want to keep watching that. Shanghai on this huge 25-year trend line. Let's just widen that out. So we got this big uptrend. We broke through it late last year. Now we're sitting right on it. Again, just got to really be careful here. PPO on this monthly chart is below zero and looks like it wants to roll over. Again, I don't think these trade wars are one country's winning, one country's losing. I think as the global economy slows down, it's going to affect them all. And so this downtrend started to look like it was going to be broken. We're below the 20-month moving average and trying to hold that trend line. We'll just have to see where the month ends up. Shanghai Weekly had a big outside bar, so they weren't happy in China that the trade deal, no progress was made there. So that's another issue. But falling towards the 40-week moving average, obviously below the 20-week moving average, and stalled at that horizontal support and resistance line. So I think the Shanghai goes lower. Hang Seng really pulled down hard this week, failed at this major horizontal support and resistance level 2 months ago. We're working hard to try and hold the bottom here, but if we start to break below the May-June bottom, I think that's a bigger deal. Again, below the 20-month, PPO is sloping down. On a monthly chart, this isn't very helpful. Big move down on the week for the Hang Seng, and look at where the PPO is here, rolling over, and it's gone below zero. So after making a high above, coming back down, making a lower high, and now getting a sell signal. Clearly not good, and we've broken this little uptrend we had going on here. All of this adds up to a mess in Hong Kong, and I know there's rallies and everything going on there, but I'm just saying it's still not helpful for the investor. So here's the Nikkei on the monthly, and we've been trapped below the 20-month moving average all year. We're sitting barely above this 21,000 level, which is important for Japan. And we're sitting right down here near this zero level, but clearly this is moving lower. So this chart doesn't look very bullish. And again, here's the weekly chart. We haven't been able to get any rally going for the last year and a half. So even though the S&P 500 has made higher highs since last September, we have not done that in Japan. And the PPO is trying to roll over again below zero. So a very bullish outcome if that was going to start to happen. A very bearish outcome if that was going to start to happen. Australia made 10-year lows in currency, and it's now breaking out to new 10-year, 12-year highs here on the stock market. So that one still looks very bullish. And so you could just see this uptrend, and it's too early to call anything wrong with this. I mean, it's higher highs and higher lows, so that's all beautiful. The Toronto Stock Exchange, we've spent 4 months trying to get anywhere, haven't really done that. And there's a downtrend here on momentum, and we're right at the point we're trying to figure out which way this wants to go. Based on Europe, I think this does roll over below zero here. Okay, here's the weekly chart. Again, the April high, we couldn't get back through it. We spent 6 weeks trying, have broken down now. We're back below the 20-week moving average. We have negative divergence on momentum here. And I just don't, it doesn't seem to me like we have global momentum. So unless all of a sudden we start to see some central banks adding horsepower, to me it looks like all these charts want to get broken. The Brazilian market continues to push higher. It was higher last month, and this month still okay. On a weekly basis here, it's pulled back a little bit, but these are still very tight trading bars. One thing I don't like is how this looks like it's building a lower high in momentum while price makes a higher high. Okay, Russia, they had a bad week and fell back down to the 20-week moving average, so I'd say they're still working above the 20-week, but this uptrend in momentum has now broken as of this week, so that's a bit of a problem, and we got a sell signal. On the S&P 500 weekly chart, we're trying to bounce out this 20-week moving average, so that'll be something to watch for the next week, and it was at 2906.81. The monthly chart still obviously bullish for the S&P, but we do have a lower momentum curve here, which is still fine. You're well up. You're at 5%. That's pretty high. But I think it's the rest of the world that I think might do the damage. NASDAQ weekly obviously pulled back down, still above the 20-week moving average. It is rolling over right at this momentum line that goes back a year and a half. So again, if we're going to make lower highs in momentum, that's a big deal. I want to get to the India chart, and on the India chart, we've broken the 4-year uptrend. Now, again, this is the stock market with the best demographics in the world. I would call that a problem. So we're breaking through that. Look at where the PPO rolled over on this weekly chart. We're still just below 1. If it gets below 0, that's a problem because it's also below the uptrend line that goes for 3 or 4 years. So momentum going below 0 on India, which is the best demographics, is a problem. England, really odd situation there with all of the Brexit stuff going on. Haven't been able to take out the 2018 highs at all, but we did make a fresh high for the year for 2019 in July, and now in August here we're pulling back slightly. We've made a lower low already, and the PPO is right near 0 here, and we've broken the 9-year uptrend. So this is a bit of a problem if this rolls over right here, right now. Spain, this uptrend is broken and it looks like it wants to roll over to me. Obviously, South Korea, Japan and South Korea having some spats going on, but they're living on the low side of the Bollinger Bands already on this monthly chart. So I think you get the idea that a lot of these charts are in very tenuous situations, and we really needed them to start performing, and they're not. So to wrap it all up, I think the biggest thing to be aware of is that all of the advanced decline line data, all of the bullish percent indexes, only half of the stocks are on a buy signal on the NASDAQ, and only half the stocks are above their 200-day moving average. All of that adds up to just not a market with a lot of breadth. Everybody's piled into the big caps. And again, the small caps would weaken before the large caps. When the small caps weaken, that's time to worry. I think it's now time to worry, and we'll watch and see if the large caps follow through. But the commodity market's getting smoked tells me that that's probably what's going to happen next, is that the larger market breaks down. Thanks, everybody. Have a good week. Sorry to be so negative. Bye-bye.